Hello, everybody. Welcome to Wall Street Hackers, one of the most exciting programs on the Pod TV network, which we discuss the stock market. We also look at stories of the week, quotes of the week, and we'll look at Peter's picks to see what stocks maybe you should be looking at in your portfolio. So with that, we're going to bring in the hacker himself, Peter Bennett, who's a graduate of UCLA, where he received his bachelor's degree in economics, University of Miami School of Law, where he received his law degree, and a master's in business administration from NYU. Then he went to Wall Street for 17 years, believe it or not, studying, analyzing the stock market, and brings all this wealth of knowledge to you. So with that, with no further ado, we're going to bring in the hacker himself, Peter Bennett, to give us an idea what's going on in these volatile times. Peter.
They are volatile.
Yours.
That's a good point, Nick. It's a fast-changing world, obviously, as we know, but that means it's a fast-changing market. It also means it's very harder to predict, and especially hard to get winners, as the breadth of the market shows. There's been a lot of flat stuff and only a few winners. So welcome to Wall Street Hackers, November 4th, 2025. I have a slight cold. I apologize if I sound a little nasally. You can catch a new episode most weeks starting on Tuesdays at 6 p.m. Eastern Standard Time, depending on your distribution channel. So as always, we start with our markets report. And this week, I'm going to let our selected quote of the weeks tell the story. And of course, you pick quotes that I agree with, as most people seek information that agrees with them. Selective information processing. So, this is an article from Hoya Capital, and it really succinctly said what I think is going on. Quote, Fed cuts, yields jump. U.S. equity markets posted mixed performance this week, while long-term yields jumped after the Federal Reserve cut short-term rates for a second straight meetings, but reined in expectations for future cuts. Fed Chairman Powell hawkishly pulled back on market expectations, saying that another cut in December was, quote, far from certain, and highlighted strongly differing views within the committee. So even the committee doesn't know what's happening. Market breadth was exceptionally narrow this week, as post-earnings gains from a handful of mega-cap technology stocks offset weekly declines from over 70% of the S&P 500 constituents. So several points that this brings up that are very relevant. One, the Federal Reserve cut interest rates and yields rose. What does that tell you? It says the market is concerned about inflation, and it's not going to be that easy. Two, Fed chair made it clear, far from certain on December rate cuts now and future rate cuts. So the market, though, has been saying for quite some time, we expect many rate cuts this year, many rate cuts next year. It's inevitable. We should raise the values in the market because of that. Wall Street Hackers, for the second time, seems to be closer than right. For a long time, we were right about interest rates in both directions, and the market was wrong about it. But especially when the market was saying there's going to be major rate cuts for about 2 years, and we said, no, I don't think so. And again, I expected the last rate cut for the first time, and this one, I said maybe, but it's not that easy because of inflation. Another point is market breadth was exceptionally narrow this week, was the comment. And the point is market breadth has been exceptionally narrow for years now. For 2 or 3 years, you can look at stocks, and most stocks have been flat. Many have been down. Even a lot of dividend stocks have not performed well. And that's unusual for the market. It's basically all been AI. As a footnote, several CEOs today came out, and I don't agree with this necessarily either, because I'm not even a short-term trader mostly, but they said several CEOs today on Wall Street said they expect or whatever a 10 to 20% possible adjustment in the market downward because of the AI trade being overvalued. So this really says that the short run has been a lot similar to the long run. And the driver of a lot of these issues is, in the end, the U.S. government, because it needs currently to print a lot of money to cover its deficits. The supposed deficit is 38 trillion, but as we point out on the show, and almost nobody else does, it's probably actually 125 trillion, which is more money than the U.S. stock market, bond market. I shouldn't smile at all when I say this, more than all commercial real estate in the United States and all privately held real estate in the United States. So basically, if it's 125 trillion, which is a pretty good estimate based on David Walker, who was the former controller of the United States under two presidents, and it looks about right, and it could be higher. That's just about everything. And these debts are coming due, and every year, as the debt goes up, I also heard today, I think I read, now the interest rate payments are $1 trillion. So that requires money printing. Generally, you can't tax that out of existence because that everything in existence in the United States, and the same thing in the world. So people say, oh, I'll just shift my money to some other country. The whole world has the exact same thing. I always point this out when people talk about the U.S. because very few people talk about the fact the rest of the world has promised free healthcare or almost free healthcare. I'm talking about Asia, Europe, South America, to their populations that are aging. And I don't think they put away anything for these future obligations on the healthcare side, or very little in a lot of these countries. And they're underfunded on their retirement plans, about the same as the U.S. So it's a worldwide deficit problem, and it requires money printing. And that's not good for the economies of the market. It's disruptive. And the other thing is, is AI overvalued? I have no idea. I'm actually going to mention a trade relating to AI today as part of my investment of the week. But it's a very defensive trade, and it's really more about generating more income, which is what we like to do. So here's an interesting chart, by the way, about overvaluation. And again, some of this overvaluation might be justified because of AI, but it's a very interesting chart. I mentioned it last week. Hopefully you can see it. Here we go. Yeah, I think it's pretty clear. So you can see that there are three circles and another really high rate. There over here is the high. This is current, or actually early this year. So what this chart is showing you is it's from Bloomberg, and it's called 2024-25 number one in overvaluation across the board. So what it talks about is these three prior picks. It shows 1929, 1966, 1999. That's what the article that talked about. And these three peaks, you could see them 1, 2, 3, were followed by massive adjustments in the ratios. What we're talking about is this was based on 7 ratios, these charts. So one was trailing PE ratios. You should know what that is or look it up. Forward PE ratios, market cap to GDP. These are very important stock market measures that are very commonly used. Again, there you go. These 3 peaks, boom. So the overvaluation became basically down to like the chart shows, from 100 down to 0 in terms of overvaluation. And it happened 3 times, and now we're at this last time over here, which is actually higher according to the article, or as high certainly as here. Although this looks higher, but I have to say it's, I can't see it exactly, but they're saying it's the highest ever. So these ratios, that's not necessarily a good sign for the market. And bottom line, though, is I'm not saying the market's going down in the next 10 years, but we've had decades of great performance. And now this goes along with what Schwab said, what Goldman Sachs said, what JP Morgan. We're in for, according to them, forecasting 3 to 6% annualized returns in the next 10 years. So that's not a high return for the market, certainly compared to the prior decades. And it means slow growth in the market, one, probably slow growth of the economy. And also with real inflation, who knows what that return is? It's certainly not what I'm aiming for on Wall Street Hackers. None of this affects, finally, my philosophy of investing, which is historically proven by hundreds of years of studies of hundreds of years in terms of dividend stocks outperforming and also finding businesses that generate high cash flows in defensive sectors with really good balance sheets and either dividend growth or very high yields to begin with, and hopefully dividend growth. So it's more like buying a business, in my opinion, but it's really hard to find. If you were going to buy a business, you wouldn't just say, oh, I'm going to go buy 5 or 10 businesses. It's a lot of work to figure out these companies. Okay, we move on. Our segment we bring in and out of, which is why President Trump or someone in the White House should give me a call. They really should. So my 30-page report called the Pathway to Fiscal Stability contains many solutions to the Medicare and healthcare crisis, and also to the under 65 market. And a few of these, a number of these ideas were adopted from the 30-page report, not just about healthcare, but about different things. But a lot of them, especially about healthcare, weren't adopted. And nobody's going to solve this problem for the United States or the world, right, without addressing medical systems and medical care in the United States. So you give me a call, I'll work for free. Okay, dividend income pick of the week. Investment of the week, and so this is more complicated than usual. So first, disclaimers: Wall Street Hackers is for entertainment only. These are only our opinions. There are no guarantees or any suggestions. Consult your financial advisor. Hopefully they're good. So this is kind of a double strategy, but first I want to mention MPLX. I mention it a lot. It is the most outstanding stock I can find, and I look. There's thousands of stocks out there. I can't find anything like it. I'd love to find something like it. It's the largest allocation in the model portfolio. So first of all, MPLX announced a 12.5% distribution increase this week. That is the 4th year of double-digit distribution increases. And by the way, in terms of Wall Street Hackers record, we've loved Wall Street MPLX at 12, 25, 35, 45, and I still love it at 51 today. It's up. So it's outstanding in terms of ratios, in terms of security, in terms of there is so much cash flow, but I'm not going to get into that totally. If you've been watching, you know that. But I just want to point out a few facts about MPLX because this next trade ties into that indirectly. So not only did it announce the 12.5% dividend increase, and now it's yielding around 8.5, I guess somewhere in there, but I looked at a list of 70 dividend increasers this week. There was only one stock that was both a high dividend and had a high rate of increase out of 70 stocks. And these are only the stocks that had dividend increases. A lot of stocks don't even do that during a year. But out of all those 70, one stock had a very decent, high, in this case, dividend increase and had a high yield to begin with, MPLX. So the other trade isn't for everybody, but I think MPLX should be for everybody, but that's my opinion. But the other trade is a little more sophisticated. And what I did is it related to NVIDIA. Now, I think NVIDIA could be overvalued. It's a great company, but if you look at the cash flow and the cash flow yield, they're very high. There's a lot of growth built in there. So a winning company, but the price over cash flow is 45. That is a 2% cash flow yield if you want to look at cash flow yield. So, and I think that's very important in looking at a company, among other things. So 2% is very low, and and the PEs assume a huge amount of growth. I don't know if they're going to achieve that, but it doesn't bother me because it's a defensive trade. But I like to see a 7 to 12% cash flow yield or higher for MPLX, which actually the way I calculate it is like 19%. You won't see that, but I'm adding back the growth projects that they don't have to do. Anyway, so the AI trade in general may be overvalued. It may be hitting its peak. A lot of people think that, other people don't, whatever. But here's the way I play it defensively. NVIDIA was at 202. So I sold options for January 27. So it's over a year at 200. So that was near its current price. And I covered and protected by buying puts in case it really crashes for 127 at 140. And that was a very small cost. So by doing this, by selling the shares at cost, I'm really assuming, one, if it goes up, I walk away with $23 a share. And that is what I walked away with on the trade to begin with. So I get to keep the $23 per share. You won't believe what I did with it. I'm joking around, but I put it into MPLX because I wanted more shares of MPLX and I didn't want more debt. So that's what I did with the $23. But the way I'm looking at it, unless NVIDIA super crashes, I mean, the market tanks totally, and I am covered if it goes down too much. The way I look at it is if it's over 179, I've made money. And in a year, I don't think NVIDIA is going down below 179. But if it does, I've only risked 1% of my portfolio anyway, if it really goes down. And if it goes down to anywhere near my 140 put in a year, I'll probably just, I'll sell that out and I'll renew the same trade. Then I'll sell a 140 or whatever put and maybe walk away with the cash again. Sooner or later, NVIDIA will stop going down, being one of the better companies, fundamentally, except for their overvaluation. So that's the NVIDIA trade. It's more complicated. You have to be very careful, by the way, with options. You don't want to over margin yourself. It uses leverage. And a lot of people know that, but not everybody. And as a footnote, don't put MPLX in an IRA or 401k qualified plan in America because there are big penalties if you put a lot of there in there. You'll have to look up the term UBTI. But it looks like a solid trade to walk away some cash. And as the diversifier, I'm willing to risk 1% and probably walk away with cash. Even if NVIDIA stays flat, I keep the $23. Okay. And next week, we'll get back to more simple, again, like MPLX, basic dividend stocks or investments, which can generate income for you. Panel question of the week. We bring in Nick. Hey, Nick.
I'm here.
Okay. And by the way, the color's a little better this week. I don't know if you did anything, but I'm still a little beige, but it's a little better. Anyway, so here's the panel question of the week. Is politics the only thing that matters to the Democratic Party leaders? Background. Today, the government shutdown will reach the longest shutdown ever. And that's, as a matter of fact, scheduled for 9 p.m. tonight, about 3 hours from now. Even the very liberal, I would say very liberal, or the liberal, certainly liberal, Washington Post said in their editorial, they told the Dems, it's time to end the shutdown, stop holding the government hostage. SNAP food stamps are going to be reduced for people starting this week and delayed. And there's some court orders now that said you have to pay out what you have in reserve, but the reserves are not going to cover this full month. So you're talking about people potentially being hungry all around the country. There was a collision of 2 United planes on the tarmac of LaGuardia Airport the other day. Luckily, no fatalities, but that's what they're risking. Potentially, maybe there will be fatalities down the road. And there are certainly longer and longer airline delays, and probably people are stressed. What if I have to go through this on Thanksgiving? It's a lot of negativity. This generally sets a dangerous precedent for the future government, because what if now someday they're in power? Is it going to be okay if the Republicans shut down the government forever, or for longer and longer? And is it going to go to 2 months shutdowns, year shutdowns, just to get their way when they're not negotiating at all, really? I mean, they even have offers to negotiate on some of the topics, and nothing seems to satisfy them. Not only that, it came out this week, more and more details about Operation Arctic Frost. It hasn't been well publicized, I'm sure, very publicized by the mainstream media, because they just bury articles, and maybe you've never heard of it, maybe you have, but under the Biden administration, the FBI targeted many and I mean many, I don't have the exact count now, Republican U.S. senators and congressmen, and 156 Trump allies and supporters. I've heard, and I've seen numbers all over the place, but I believe they may have targeted over 400 Republicans and Trump allies. And we're talking, when I say target, I mean the FBI tapping phones, tracking phones, and doing all kind of spying on Americans. This Watergate was supposed to be the worst thing in the world, and they've talked about it for decades. This Watergate is like a kid's prank compared to this. Watergate, a small group of people went into an office building to steal some stuff and spy on them, and it wasn't even the president who authorized it. He just got in trouble for covering it up. Here, it's the FBI, and they're tapping tons, hundreds of their adversary party phones and spying on them. Now, it does make Watergate look like a joke. So, Nick, is politics the only thing that matters to Democratic Party leaders?
Well, the truth apparently doesn't matter. What gets me about the shutdown more than anything, Peter, is they're saying it's the Republicans' fault that the government shut down. But when I look at it, and a lot of people look at it this way, the Republicans voted to have a clean CR, basically a continuing resolution to keep the government open. Most of them did. Obviously one or two did not. But the vast majority said, yep, we'll keep the government open. We're going to go ahead and fund it. The Democrats said no, and they didn't fund it. Mm-hmm. Then they blamed the Republicans. But here's the logic, the reason why. Because I talked to the Democrats. Why? It's because the Republicans aren't going to do what we told them to do. And if they don't do what we tell them to do, then we're not going to vote for it. So they didn't vote for it. But bottom line is this. They're the ones who shut the government down.
There's no doubt about it.
Plain and simple. And I don't know. Yeah, I don't know who they're fooling that it's nothing but their fault. So if you're not getting your, the other problem is the food stamps. Let's go talk about that. Shut down, people aren't getting their food stamps. The problem in food stamps, it's the amount of people that are on food stamps.
Well, that's another
42 million people, Peter. Mm-hmm. Okay. So who's going to pay for this $38 trillion debt? And I'm not talking about the off balance sheet. Who's going to pay for it? The billionaires, you add them all up, they're $8 trillion. You still have $30 trillion in debt. Are the people on food stamps going to pay for it? Nope, they don't have any money. So who's going to pay for it? Middle class is going to get hit hard.
Absolutely.
We're seeing that over and over again. But this really bothered me that 42 million people are on food stamps. There's something wrong with the United States to have that huge amount of people that are on food stamps. That's like the entire population of Spain. All food stamps.
Yeah, well, I mean, I'm sure Spain has its issues too, but a few points about what we said. First of all, you made a good point. It's like, clearly it's the Democrats. I'm not pointing fingers. I am pointing fingers, but I'm saying, yeah, it's not the Republicans that would have shut down the government. But the thing is, even the Republicans said, we'll negotiate to open up the government and even talk about maybe one of the big issues, which is maybe some more subsidies for healthcare. And some of them are in favor. They might even do it once it opens. But they're saying we're not going to be held hostage, and open it up and we'll talk to you, and maybe they'll find some compromises. But 13 times they opened it up, voted to open it, and clearly they want the government open. Another point is what you said about billionaires. Yeah, well, again, it's not, they could tax all the billionaires and all the middle class and all the upper class. They could tax everything because it's the bonds, the stocks, everything privately held houses and commercial houses. That 125 trillion is just about equal to everything in all the wealth in the country, and other countries are in the same situation. And the final point is, there's a lot of reasons about what you said. The 43 million people on food stamps, some of them, I'm sure a lot of them really are struggling because one thing, it's so expensive to live now. And that reminds me of one other thing, oh my gosh, some of the things. So, but under the Biden administration, inflation got so expensive. Housing already was expensive. The government can be blamed for a lot of this. I blame the government for the huge cost of college, which is really really hindered the middle class tremendously, because government subsidies to loans let middle class people borrow $250,000, and that allowed the colleges to charge it. So they interfered with that. There was interference with the housing market that stimulated. They brought interest rates way too low, and that just increased rates. And then when it went up, it's like, but the prices are already high there. And the other thing, a footnote, is one of the big arguments Democrats are saying now is Trump has not brought down prices. Well, you know what? Prices never go down. They flatten and they don't go up a lot. That would be historically incredible. Or maybe it would be a depression, but that's not how the economy works. If inflation goes up during one administration, the best an administration can do is stop the inflation from rising. Or all of a sudden, people are going to say, okay, I was selling, my food for $5. Now I'm going to sell it for $3 or $4, or anything, cars, whatever. Might go down a little, some sectors, but overall inflation has never gone down a lot, and you're not going to be able to control it. But if you can stop it from growing and the economy grows, you can grow out of it. So here's my points. One, Senator Schumer seems very heavily invested in this because he is afraid that AOC is going to primary him, either herself or primary him out with somebody else, but very likely herself. She'll run for Senate on her way to possibly being president in her mind, even though she's not really very sharp. But so Schumer's worried about that. So he has to be very hard left. And there's a lot of power in the Democratic Party, as we know, as in any minute now, they're going to announce whether we have an actual communist running New York City. We'll find that out. It could go either way. I wouldn't be surprised if it went either way. But the fact that he got the nomination, Mamdani, is incredible. And another point is, it seems like there's nothing almost they won't do. Now, a few examples is the Democrats, when they had power, impeached President Trump for just asking the question, did the Bidens do something wrong in Ukraine? The evidence was at least highly suspicious. $5 million paid to the Biden administration, and Biden on TV talking about that he arranged for the prosecutor who was going to go after Burisma, who was paying him the $5 million, that he got them eliminated. That sounds a little suspicious to me. It's worth at least an inquiry. So that instead they impeached Trump. Operation Arctic Frost now comes out, spying on hundreds of Americans. Are we a third world country? We certainly might have become one. And when they were in power, they came this close to eliminating the filibuster, which would totally destroy the Senate's balance or any balance in the country. And luckily, the Republicans aren't going to do it, but they were one vote away from just ruining the filibuster. It was just the Pennsylvania senator on their side who prevented it, and I think Manchin too, maybe too. But if you get rid of the filibuster, who's ever in power can do whatever they want. And that would be so one-sided. It's a very important part of the balance of power in America, so that one party just doesn't take over. And if they take over, the other party may never get power. For instance, if there had been a filibuster eliminated, they might have made Puerto Rico a state and done some things like that. And if they did that, that's it. Okay, we're a one-party country. A one-party country sounds an awful lot like a dictatorship or an authoritarian, sorry, you know what I mean, regime. So I have trouble with that word this week. Anyway, the bottom line is, it seems like whatever it is, there doesn't seem to be a lot of balance in the Democratic Party, and it seems like they'll do almost anything because they're justifying it with we're right and the other party's wrong, and we're going to do everything we can, no matter what the ethics, the morals. It's just not good, and it's not good for the Democratic Party because people will see through this eventually. They already are. They're losing support, and it's going to continue probably because we're in the information age. You can't hide this stuff forever. You used to, and they used to have all the control of the media, but now we're in a world with the internet and people can find things out and information spreads quickly. It's not a good strategy for the country. It's dividing the country, and it's going to hurt the Democratic Party. They really need to change, but I don't think they will in the short run. Anyway, thanks, Nick, and thanks for watching Wall Street Hackers. We will be on next week. As Kim always says, get healthy, get wealthy. And yeah, we'll be on 6 p.m. Eastern Standard Time, Tuesday, starting next week, depending on your distribution channel.
Okay. See you next week.
All right. See you next week, Nick. Bye-bye.